Hey guys, what's going on? Welcome back to Stocks with Surfing. As you guys know, the end of the year is approaching extremely quickly. As of recording this, it is the 29th day of December, meaning we only got 3 more days of 2025, and I think 1 more stock trading day after today, and that is absolutely insane. So, given the end of the year is approaching so quickly, I thought we would do a little portfolio review to end the year, maybe go over some goals, and I have a little bit of a fun segment where we're going to ask ChatGPT what it predicts are going to be the best performing stocks of 2026. And, we're going to see if I agree or disagree with GPT's picks. But let's get right into the portfolio review. So as you guys know, just like this YouTube channel, this public portfolio is extremely young. This is the month time frame right here, and it literally doesn't even get back to it because I funded this account on December 1st, 2025. So with the recency of this account, let's take a look at the holdings that I've bought. The first is Constellation Software. As you can see, that one is still fighting to be in the green, but it's just barely in the red at 0.86%. The second holding I have is Mastercard, and it's up 6.5%, which is a pretty good return given that I bought it within the last month. I will definitely take that. Now, these are two companies that I continue to believe are going to perform well into 2026. Mastercard, I think, has a long growth pathway, and Constellation Software, I do believe that it can grow, probably at a slower pace than historically, but this is also sort of a bounce back play, as I do believe this company is currently pretty undervalued. So as you can see, this year to date, my portfolio is up 0.19%. But hey, like I said, this portfolio is really only a month old, so doing a yearly update for it at this point doesn't seem very important, given that this thing is in no time to compound, and honestly, any gains are just luck at this point. Like up 6.5%, that's just luck. I bought it and it went up. Now, we'll see how good this pick is over the long term, where luck will play less of a factor. So let's take a look at my watch list here, because these are all stocks and different assets that honestly I think will perform pretty well in 2026, or at least I have reason to believe that they will. So the first I want to look at here is gold, and that's the only non-productive asset on this list. All the other 4 are stocks, but I think gold is a really great thing to hold right now. Maybe you don't want a ton of it. I only personally have about 5% of my entire portfolio, my non-public portfolio, in gold, just because it's a great hedge against inflation, where inflation is definitely something that's going to be more of a consistent problem in, like, for example, the US. In Canada, it seems to be getting a little bit more under control, but it's definitely still hard on things like food here. The next, we have Waste Connections, which I think, I've talked about this before, I think this is an incredibly stable company with pretty predictable revenue growth. Although it's not the fastest growth, I think it's extremely predictable and a pretty safe bet as far as sort of, growing your money goes. Now, is it going to be the fastest? Probably not. But I do like Waste Connections for a bit more of a conservative play, and something that I could definitely add to my portfolio in 2026. Next up, we have Brookfield. Now, this is a company I own a considerable amount of in my non-public portfolio. I really like Brookfield for a number of reasons, but it is a rather complex company, and it's pretty difficult to understand if you were just to learn. Like, I'm not going to be able to explain it in a couple minutes for this video, but I'll definitely make a video on Brookfield in the future, because I think this is a great company with great growth prospects. Now, don't be startled by the PE ratio. That's not the main metric you're really going to use to analyze this company, but I definitely want to make a full video on Brookfield, because I am planning on adding that one to the portfolio very soon. Next up, we have Amazon. Now, you might know Amazon for being a little bit undervalued earlier in the year and then starting to get caught up here. And, it even surged, but the price came back down. This is a stock that I wish I bought back in April. It's been held down most of the year simply because the capex is pretty high. So all the free cash flow they have is almost just being reinvested into the company. Now, for companies, growth is pretty expensive, and I think we're seeing Amazon, pay the price of the extreme growth that they're going to have. Assuming Amazon has any kind of decent return on the capital that it's invested, the reason why the free cash flow looks a little bit lower, then honestly, Amazon could be 50% undervalued at this point. I definitely want to make a separate video on Amazon as well, because I think this is a tremendous company, and one that I do want to add to the portfolio next year. As well as it does have a very stable retail business, and as you guys can see in my account here, I have zero exposure to retail. I guess Mastercard, is kind of a retail stock is, people are going to use it when they go to retail stores. So it does have some tailwinds from retail shopping, but I have no direct access to that sector yet. The next I want to talk about here is Google. And Google, I think, is just a tremendous company. It has had an amazing run up over the second half of the year, where you can see it's up 63%. And if you do a 3-month here, yeah, it's up 29%. This thing is an absolute beast. Now, Google's a company that I currently believe is pretty close to price to perfection at a 31 PE. I think if you buy it here, you can do pretty good. But personally, for this public portfolio, I'm hoping to get it, a little bit more undervalued. And if we have a market sell-off early next year, then this is definitely a stock I'll be looking to add. They have lots of avenue for growth with, Google Cloud. Waymo is becoming pretty big, and that's not even yet profitable. If Waymo can scale like Uber has, then that's going to become a massive part of this business. And we aren't even discussing YouTube, the ultimate streaming platform that you're literally on right now watching this video. Now, that's it for my watch list going into 2026. I'll definitely keep you guys posted on what of these I decide to add, and if I don't add them, I'll explain to you why I decided to go the other way. Now, this is not financial advice. I do not recommend buying, anything that is beyond your risk. Talk to a financial advisor. Anything you hear on this channel is literally it's all entertainment. I'm an idiot on the internet trying to grow my own money. I've done it before, and I'm trying to continue to do it, but still do not listen to anything I say. This is all for entertainment purposes. Now, quickly before our ChatGPT segment, I just want to talk about some of the goals I have for this portfolio going into 2026. So first off, I want to continue to contribute $100 every single month this year, and I want to invest it into companies that are growing revenue at a fairly quick pace, because I do want to outperform the market next year. We don't know what the market's going to do, but I personally know I want to do better, and I feel like I can do that through picking companies that are better than the average company within the S&P 500. I think I have a pretty good odds at doing that if I can pick great companies. Now, I don't know that the price is necessarily I don't know if the percentage that the stock is going to go up is going to be better than the S&P 500 next year, but I think my overall revenue growth amongst the companies I put in this portfolio can beat the S&P 500. And that's how I want to look at things, because it's hard to guess, the stock price, because sometimes it's detached from the fundamentals of the company. But I want my companies to be fundamentally better than the average companies in the S&P 500. And if I do that, I feel pretty good about my odds of beating the market in 2026. Now, for a personal goal, I want to continue to upload videos to this YouTube channel and continue to grow it. If you're at this point in the video, I thank you. Please subscribe. That will help me with my goal. And without further ado, let's get into the ChatGPT segment. All right, guys, so here we go. As you can see, the prompt I'm going to use is, tell me what you believe to be the top 3 performing stocks of 2026 based on total returns. Make all 3 from different sectors, include a thesis for every company, and avoid any bias. Let's see what ChatGPT thinks are going to be the best performing stocks of 2026. All right. So number 1 is going to be NVIDIA. Now that makes sense to see NVIDIA at the top. This is obviously one of the best performing stocks of last year. Let's see the thesis. So NVIDIA is widely considered the leading play on artificial intelligence. Infrastructure analysts expect demand for its GPUs and software ecosystem, CUDA, to remain exceptionally strong as AI workloads proliferate across data centers, cloud platforms, and enterprise applications. Some forecasts suggest robust revenue growth through 2026, driven by continued AI buildouts from hyperscale customers. Even relative to other tech names, NVIDIA often tops lists of high-growth stocks for 2026. Now, why it could outperform? Near monopoly in high-end AI accelerators, strong software ecosystem stickiness, and continued capital expenditure by cloud and enterprise customers. Key risks: valuation remains high and highly correlated with AI sentiment. Downturns in AI spending could weigh heavily. Now, I do think NVIDIA objectively is an incredible company. You saw their last earning report. Everyone, including myself, we were all looking for this company to, show a sign of weakness, but it didn't. It beat expected revenue growth. It beat on earnings per share, and their gross margins expanded, meaning that this company was actually somehow becoming even more dominant. Now, personally, I'm going to stay far away from NVIDIA. This is a company I held in my private portfolio back in 2021 into 2024, but I did sell it at about 140. not gonna lie, because to me, the valuation did simply just become too high for me. AI is obviously a segment that's gonna dominate the market. It's going to, for better or worse. If AI, CapEx from these big companies like Google, Amazon, Tesla, etc., if it keeps going up, then NVIDIA is likely to do extremely well next year. But if any of these companies show weakness, or maybe that they overinvested in AI for what, the products that they're developing are going to be able to bring back in free cash flow, then NVIDIA could become an extremely volatile stock to the downwards here. Because in our last video, we literally looked at it, and NVIDIA would have to have 30% earnings growth for the next 10 years to rationalize the current valuation. And no matter what anyone says, the price you pay for a stock does matter. You need to pay reasonable valuations because it just lowers the risk factor. If you're paying up right now for NVIDIA, then you have a heightened risk factor versus if you buy something that I have in my portfolio, similar to Constellation Software. If you buy Constellation Software this low, I think the risk is significantly lower than buying NVIDIA near these all-time highs, where the valuation is so intense. The next stock that ChatGPT is telling us about is Amazon. And while we did already discuss it a little bit, let's take a look at what ChatGPT has to say. So, Amazon combines resilient consumer demand with leadership in cloud computing through AWS, Amazon Web Services. Analysts see AWS and advertising as major profit drivers, with AI integration improving efficiency and margins across segments for 2026. Several forecasts imply meaningful upside from current levels as AWS adoption grows, alongside continued expansion in high-margin services like advertising and AI-enabled logistics. Why it could outperform. AWS remains the largest cloud player with ongoing enterprise AI demand. Advertising complements e-commerce retail margins, scale advantage in fulfillment, logistics, and AI tooling. Key risks: macroeconomic pressure on consumer spending and competition in cloud service could tamper growth. Now, I will say I do believe Amazon is a tremendous company, as I talked about it earlier before this segment even began. Now, people do say that AWS is accelerating, and that was the problem with Amazon for a long time, is it looked like Amazon Web Services growth was starting to flatline a little bit. But in the most recent quarters, it has shown that it is in fact growing again, and that's extremely big news for Amazon because that's the most profitable segment of the entire company. As you know, AWS basically pays for the retail store itself, making Prime actually be able to work. So I do believe that Amazon is going to be a great company to hold going into 2026. I have to agree with ChatGPT. So I agree with Amazon and I disagree with NVIDIA. Now let's take a look at the final company. All right, the final stock that ChatGPT is telling us about here is Visa. So its thesis for Visa is Visa benefits from the long-term global shift away from cash towards digital payments. Analysts expect steady high single-digit to low double-digit revenue growth through 2026, driven by cross-border transaction recovery, emerging market adoption, and value-added services such as fraud prevention and data analytics. Its asset-light, high-margin business model positions it well for strong total returns even in slower economic environments. Now, why it could outperform: structural tailwinds from global digital payments adoption, high operating margins and strong free cash flow generation, and growth in cross-border travel and commercial payments. Key risks: economic slowdowns reducing transaction volumes, and regulatory scrutiny in payment networks. No, I think Visa is an absolutely incredible platform. I think Visa is an incredibly powerful company, and you can tell I do because I own Mastercard, and Mastercard is not the exact same as Visa, but they're extremely similar. They both have the same tailwinds of, global digital payment adoption, and they both have extremely high margins of like nearly 60% and very good strong free cash flow growth because, they don't have a whole lot of assets. They don't have like virtually any debt, an extremely strong balance sheet. I just personally prefer Mastercard. I think Mastercard is at a slightly better valuation. I think its value-added services are growing at a much quicker pace than Visa. Although Visa's overall network is a fair amount bigger, I think Mastercard is the better pick here. But I have to agree with you just because I think Visa is a great company, and I don't think you can go wrong with either of them. And honestly, in the future, you might even see me add Visa to this portfolio. To be honest with you, it could be in my public portfolio. I could have Visa and Mastercard. I see that being a potential possibility in the future. But for now, I want to build up my position size in Mastercard and add a couple more sectors to make this thing a little bit more diversified. So with that being said, that wraps up this video, and I hope you guys enjoyed it. And if you did, please subscribe, like, comment if you agree with ChatGPT, comment if you would disagree with me. Let's see. Let's talk about it. I'm down to have these conversations. Honestly, I think it would be a lot of fun. If you guys disagree or agree with me, let me know. And of course, none of this is financial advice. Do not listen to me. Do not listen to ChatGPT. Just go to a financial advisor and listen to them. So with that being said, I hope you guys have a wonderful new year. Best of luck going into 2026. I hope the S&P 500 ends up 25% next year. That would be an incredible year for all of us. And I'll see you guys in the next video. Peace.